Assalamualaikum warahmatullahi wabarakatuh. My name is Nur Qamarina binti Masran. I'm from Group B Financial Accounting and Reporting 5 and I will represent my views on ethics and accounting. Okay, for the introduction, applied ethics which heavily stress business and human ethics, judgment and moral principles and their application in accountancy is the major term for ethics in accounting. A proper practice and a high professional standard serve as accounting two main ethical pillars. Muskie and Troy contend that ethical responsibility in the business sector does not exist in a generalized sense but rather in the specific context of ethical activity. The majority of businesses in the world have ethical problems with their accounting procedures, which raise the possibility of conflict of interest. Financial misstatements that violate ethical standards in corporate finance typically harm an organization's reputation, customer satisfaction levels, and investor confidence. In my review, we will discuss about the Sarbanes-Oxley Act of 2002, earnings management and ethics, earning management and inappropriate accounting in Enron, impacts of accounting on society, responsibility of CEO, CFO and auditors in developing ethics in accounting, and lastly, rules and regulation. Also, we will also conclude the conclusion for the article review. Okay, next, the Sarbanes-Oxley Act was created to adhere to the current securities regulation and was intended to improve the accuracy and dependability of business disclosure in order to protect investors from fraud. Financial statement fraud should be preventable and detectable in some way. Because of this, the Act mandates that management evaluate and submit reports on the efficiency of internal control over financial reporting. By eliminating financial statement fraud and the manipulation of earnings management, the Act also aims to improve accounting ethics. Due to the imposition of criminal penalties of misbehavior connected to the false financial statement, the Act was created to stop illegal and unethical activities by accounting companies. Okay, next we will discuss about earning management and ethics. Most people consider financial ethics to be the most important problem confronting the accounting industry. When managers and accountants break the rules of ethical earnings management, fraudulent action take place in the financial system. Managers and accountants modify financial data in certain situations. This change typically involves adding predetermined results to the financial accounts, which produce results that differ from the actual ones. In the accounting industry, this practice of manipulating earnings is typically referred to as earnings management. It raises questions, particularly when fraud or data infringements occurs. The organizational culture and social norms that link earnings management ethics have a significant impact on the norms that are observed in an organization. It is anticipated that the Sarbanes-Oxley Act actions, revision and articles will aid in bringing ethical standards to financial setups. As a result, the Act aim to stop organizations from engaging in deceptive or fraudulent behavior, particularly when reporting financial information. Okay, we will discuss the inappropriate accounting in Enron. Enron and Arthur Andersen experienced several infamy which led to their insolvency. Enron and Arthur Andersen are two leaders in the utility and accountancy industry, respectively preyed on the general public elected officials and investors to boost their own fortune through the dishonest and unlawful business practice. The Securities Exchange Commission established through investigation that Enron had engaged in unethical behavior with regard to false financial reporting. In order to increase the transparency and dependability of the company's financial statement, several penalties were placed on the company and tight legislation governing accounting standards were implemented. Before Enron's collapse, there had been clear safety precautions that had greatly aided in protecting the general public and investors. In the case of Enron, these laws were firmly enacted to prevent investors from using the increased stockholder investment or to raise money by severing their ties to subsidiaries and strengthening their balance sheet with inflated asset valuation. To ensure the creation of true and trustworthy financial statements, high standard of ethics accounting must be upheld in the company. Financial statements must be helpful to end users in order to facilitate their financial decision making, according to accounting and ethics. Accounting professionals must uphold ethical standards and make sure that all end users are given timely, accurate, and transparent information. Any purposeful effort to create fake financial statements could seriously harm a company's reputation. The level of oversight and control by superiors is reduced due to decreased ethical standards among a company's accountant, which open up opportunity for auditors to act unethically and hide evidence. Significant data alteration are made possible by it, which makes it possible for serious crimes like tax evasion and fraud to be committed. When accounting professionals engage in an unethical behavior, it damages the organization's reputation and reliability among its stakeholders. Lack of trust brought on by unethical behavior tests the firm's reputation, which makes it challenging to conduct the business. Last, due to the limited usefulness of financial statement and the unethical actions of accountants involved, this action constitute a violation of the law. As a result, these financial statements have an inadequate legal character which significantly influence the decision-making process. Senior management, comprising the Chief Executive Officer, Chief Financial Officer and Auditor, is in charge of creating ethical standards for the company. Since it is their responsibility to handle ethical issues, it is crucial for the CEO and CFO to present themselves in an honest and ethical manner. They must resolve conflict of interest between their personal and professional relationship, whether they are obvious or not. The CEO and the CFO should be in charge of addressing any issues with how internal controls are implemented and operated with regard to the reporting of financial statement. They should, therefore, enhance the procedure of recording, reporting and summarizing the financial data. To promote accounting ethics, accountants must make sure that the opinion on the financial statements complies with the rule of financial reporting. In order to assist users such as investors and lenders in the decision-making process, auditors should ensure a high degree of high confidence in managing and controlling the financial statements. Internal control systems are better understood and evaluated with the aid of auditors, who also enable the creation of protocols for carrying out the analytical procedure of auditing. The establishment of ethical norms inside accounting firms is a top priority for the public and commercial sectors. The adoption of the ICAEW Code of Ethics is strongly encouraged in order to ensure the mitigation or decrease of unethical acts within society. The Institute of Chartered Accountants in English and Wales, or ICAEW, developed this code in order to teach moral or ethical behaviour among experts, academic and businesses in their professional business activities. The Code of Conduct for accounting professional defines standard for professional conduct that will help the financial market and ensure the accuracy of the financial statement that investor and stakeholder rely on to make choices. Additionally, it promotes the equitable distribution of resources to all stakeholders, ensure that it support the development of each individual enterprise and sustain and support the non-profit organisation to help them meet their social and economic goals. As for conclusion, according to the research, national professional bodies must include ethics dimensioning for the accounting profession if they want to improve firm reputation and the effectiveness of financial statement while reducing fraud and criminal activity. Government and public governing bodies must promote and advance ethical businesses practice in accounting business. From all the discussions mentioned before, that is all my views regarding the issues of ethics and accounting. That's all from me. Thank you.